Hey everyone, welcome back to our channel where we explain finance and investing for beginners. Today we're going to be explaining what is a 401k. If you guys are interested in learning more about 401ks and how they work, stick around. Also, if you could do us a huge favor and hit that like button, it really helps out our channel. And if you want to see more videos like this, make sure you're subscribed. Alright, so let's get right into it. What is a 401k? A 401k is an employer-sponsored retirement plan that allows eligible employees to receive certain tax benefits. It's an incredibly powerful tool that allows you to save for retirement and reduce your taxable income. Okay, now let's get back into it. Now there are two main types of 401ks, which are the traditional 401k and the Roth 401k. The main difference between these two is how and when you pay taxes. With a traditional 401k, you contribute pre-tax dollars, meaning you won't have to pay taxes on that money until you withdraw it. While with a Roth 401k, you contribute post-tax dollars, meaning you'll have to pay taxes on that money when you contribute. However, the money you withdraw in retirement will be tax-free. Now, both types of 401ks have contribution limits set by the IRS every year. Now, most 401ks also offer an employer match, which is basically free money. This is when the company will match a certain percentage of your contribution up to a certain limit. So, for example, let's say your company offers a 50% match up to 6% of your salary. If you contribute 6% of your salary to your 401k, then your employer will also contribute 6% of your salary to your 401k as well. This is essentially free money, and it's important that you take advantage of it if your employer offers it. Now, there are also some downsides to a 401k. One downside is that you generally cannot access your money without penalty before the age of 59 and a half. This means if you contribute to your 401k and then decide you need that money for something else, you'll have to pay a 10% penalty on top of any taxes you may owe on that withdrawal. There are some exceptions to this rule, such as if you become disabled or if you're going through a divorce. But generally, you should think of your 401k as money that you owe, unable to touch until you retire. Another downside is that 401ks are only available to employees of a company that offers the plan. This means if you're self-employed, you won't be able to open a 401k. In that case, you can look into opening a solo 401k or SEP IRED, which are similar plans for self-employed individuals. Alright, so now that you know the basics of what a 401k is, we've now walk through an example so you guys can see how a 401k works in action. Let's say you're an employee who makes $50,000 a year, and your employer offers a 401k with a 50% match up to 6% of your salary. If you decide to contribute 6% of your salary to your 401k, this means you'll be putting $3,000 a year towards your retirement. Hopefully you guys were able to get some value out of this video. We really wanted to break down what is a 401k and how it works in an easy to understand way. So, hopefully we were able to do that. Again, if you learned anything from this video, please hit that like button. It really helps out our channel. And if you want to see more videos like this, please make sure you're subscribed. Thanks for watching, and we hope you learned something new.